Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. Both risk and opportunity today, people. It's 11 a.m. on the East Coast on this Wednesday, August 20th. Month is just flying by. It's Dan Nathan. It's Guy Adami. It's a market that's lower here. S&P down 1%. Haven't seen that in a while, but I think of more import in NASDAQ down almost 2%, which we clearly haven't seen in a while. Hello, Dan.
Hey, Guy. I was on with Liz on the Risk Reversal podcast.
That's Elizabeth Thomas.
Yes, it is Elizabeth Thomas. It is in your favorite podcast store if you're not following the Risk Reversal podcast. But
the hell are you doing?
Aside from saying that she zhuzhed something, I don't even know what the hell that means with her hair. I said, you got a nice little cut there. And she said, well, let me just give it a zhuzh. But we went over the biggest down days that we have seen since April in the S&P 500. I think there was one down 1% day in June, one in July possibly, or one in August. The point is like there's been two in the last few months or so. So to have this sort of gut punch over the last, let's call it 36 hours or so, is definitely notable. The fact that the NASDAQ is doubling up the S&P guy to the downside, not surprising when you see the concentration in some of the names that are being hardest hit. Can you put your finger on the reason why this started yesterday on the opening and follows through till today?
Short answer is no, if I'm being perfectly honest. I think we've become a society, and this is not directed at anybody. This is just a general comment where things happen and then you try to come up with an explanation as to why things happen, because if you can't explain it, it doesn't make sense. But sometimes things just happen and there are no real explanations. I mean, the concerns that I've had, and I think that you share, have not gone away. And for whatever reason, the market was looking past them until seemingly yesterday. But what I will say, and we'll throw up an S&P chart, and this I know because there's a level of consistency to what we do. In the beginning of the month, we talked about some of the, I don't want to say turmoil in the market, but some of the reversal days that we saw that we had not seen for a while. And we sort of put out there, we pontificated that, maybe this was the beginning of something. And the premise we made was, you haven't seen sort of engulfing days like this. And we had it in individual stocks, we had it in the indices. And that historically that's led to something. And now seemingly here it is. I also said in July, if I'm trying to be consistent here, that I thought early in the month, given that in July we made a new all-time high in the S&P, that there was a chance we would see an outside month. Obviously, that did not come to fruition. But now you have a very similar setup with, by the way, much easier comps. And when I say comps, in the form of what the S&P needs to trade below to have that outside month. So maybe instead of July, August is setting up. And before I turn it back over to you, we also thought that you'd see vol by the end of this month trade up to about 25 or so. We actually had a question about it yesterday. CC brought up the fact that today was an expiration day, and historically after expirations, you see a spike in vol. So that's seemingly coming to fruition as well. So to answer your original question, the answers to what triggered it, I have no idea. But I guess my broader answer is a lot of these things have been sort of in place for quite some time.
Yeah, and we didn't even bother in the S&P futures here to draw that uptrend. We know that we've seen a lot of these sort of steep rises from the April lows are now at least testing or starting to break through those uptrends. But the breakout levels, to my eye, Guy, and I think you're there too, are really important. In the S&P futures, we did not get down to the breakout level from June on that jobs report day. So that was obviously the July jobs report. And look at how much higher we are now, even being down 3.5% or so from those recent all-time highs. The other thing I just wanted to mention on the VIX, and I appreciate CC bringing that up, it is the third Wednesday of every month that the VIX has that expiration, where on the S&P or any other single stock or ETF or index, it's the third Friday of the month. But we know that we have daily expirations, weekly expirations, so it's not that important. But a lot of the volume will gravitate from much earlier in the year or whatever you want to that third Friday, because a lot of those weeklies are not listed yet. Guy, one of the things that really stuck out to me, and you mentioned your view that you thought we might have an outside month. This is in July, and possibly that's what we get here in August. Let's pull up Microsoft for a second here, because this,
Mm-hmm.
me, one of the more interesting sort of names in the space. And let's just do two things here. So that's a 1 year, but let's go back to a 5 year for a second. And so we had been highlighting the fact that as an early beneficiary of the generative AI trade, because of their investment in OpenAI, and there were two going back, I think the first one in 2019, and then the second one that was the big blockbuster one of $10 billion in 2022, because of that investment, there was the name that people kind of gravitated towards to express this in the public markets. And then you see, let's go now to a 2 or 3 year chart for a second. You see that consolidation that we had. It made a high, and you had highlighted this on many occasions in the summer of 24. And look at the relative weakness. And you could just, you don't have to look at the other charts in the space. NVIDIA would be one of the biggest ones. And look where we were when they reported that Q1 result. You had that huge gap, and then let's make it a 1 year chart here for a second. And then this just slow, low vol grind higher and higher and higher. And then it culminates into that Q2 report that we had just a few weeks ago, a massive gap on massive volume to all-time highs, closes on the low, and has barely seen an uptick since then. Now you could say, Dan, it's only up 8.5%, Guy. So what would you say? Dan, it's almost only up 8.5%.
Only up 8.5%.
But look at this thing, man. I mean,
so let's break this down a little bit. So put that original chart back up, the longer term one, and that blow off top. I mean, that is a classic blow off top. And if you sort of highlight that day, if we can just zoom in and just look at that one particular day, if I don't have this in front of me, you probably do, but this is a stock that typically trades about 20 million shares a day. On the day that it made that all-time high of, I think it was 555.55 or 555.45 or something like that. My sense is it was a pretty huge volume day. And the fact that you had sort of that huge open, closed on the lows, I mean, that's textbook stuff in terms of potential blow off top. Now, if you're looking for support, and I go a little longer term, I'm going to have you draw a trend line, or have Jacob or Steven draw a trend line. I need a little bit longer term, if you may, and I'm going to show you what I'm looking at. So draw from I was going to say from the 2023 low, and then connect the April low. And the third point's going to come in right probably around $400 if you want to do that. And you say, well, we haven't made the third point. Yeah, I know that. That's the point. That's where your support line is going to wind up. And I'm right. It is right around $400. So with time decay, that's going to get higher each day. That's going to be your support level, people, believe it or not. And you're going to be like, you're out of your friggin' mind. We're never going to see that again. I'm not convinced we're not going to see that again. And keep your eye on that. The moving average is probably about 440-ish or so, the 200-day moving average. You still have that huge gap in the chart that Dan just talked about from that April level. This is what, if you're looking for an entry point, or if you're looking to get out of an existing position and reestablish a long, that trend line is going to be your friend. It doesn't look like it now, but trust me, a couple months from now, we're going to be talking about this.
Yeah, the other thing I would say, draw a horizontal line from that December high. You'll see that sort of 450-ish breakout level. I mean, that would, to me, you're probably, by the time, if you were to get there, you're going to have the 200-day moving average there too. So that'll be like the first intermediate sort of level. And, listen, this is one of those names where when they reported their Q2 last year in 2024, you saw a deceleration and you saw forward numbers. They didn't go down much, but they didn't go up, right? And at some point, if you see a sort of digestion in the spend or demand for compute on Azure, one of the big stories was the reacceleration in growth in Azure. They have not been breaking out what their uptake has been in AI, offerings away from the cloud. So I think that's going to be something that really kind of sticks out, or it really is the potential for this thing to kind of catch some steam to the downside if we start getting towards the end of the quarter, and that is the narrative. But on an earnings basis, expected to be 14% this year. This is a fiscal year. We're in Q1 of their fiscal year. 17% next year, and on a revenue standpoint, 14% expected this year and 15% growth. Trading about 2x that as far as the revenues are concerned, and a little less for 2027. So there's a lot of growth that is kind of priced into this name. And this is a stock that has 67% gross margins, which is far less than that of, let's say, a Meta, probably in line-ish with a Google. So just wanted to kind of highlight Microsoft. I think it's really important. Guy, really quickly, let's go to the NASDAQ 100 futures, because we'll just kind of rip through the major indices, and we can see, we just mentioned that you're seeing to the downside a doubling up of that performance. We've rallied a little bit off the lows since we were talking about this. Let's just do a one-day chart here. But you see that breakout level, and you see that kind of rising 200-day moving average. So we bounced a little bit here. Let's just do like a 5-day if you can, and just to kind of show where on the near term you might see a little bit of a bounce. I mean, that's not a great 2-day right there, but we will see. Guy Adami, what else is sticking out to you?
Well, let's throw an NVIDIA chart up too, because obviously that's top of mind for a lot of people. And I think my views are I know your views, I know my views. I mean, I think we've been pretty outspoken about it, but again, this sets up, well, depending on what happens over the next week or so, I think that run up set it up somewhat poorly. But we've seen this movie before in NVIDIA, and you said it last night, and I'll say it again. If you start to see, we saw margin deterioration earlier this year. The market gave NVIDIA the benefit of the doubt when they said they will see a reacceleration in the back half of 2025, and it was a one-off thing, and the market bought it hook, line, and sinker, and maybe they're correct too. With that said, now that we're in the middle of August, now it's a sort of put up or shut up period of time. And I think that margin number and that guide is going to be critically important. And as I mentioned about revenue guides with them, the first real huge revenue guide, I think, was a couple years ago when they went from about $7 billion in expected revenues to 11.5. And just think about that for a second. The magnitude of that was significant. I mean, it was more than it was a 55% guide higher in terms of revenues. Since then, the numbers have been larger, but the percentages have been smaller. Now you'd be like, okay, you're splitting hairs. Not really. The market's giving them, they're pricing in all that revenue stuff, but they're not pricing in the slowdown in percentage growth. And I think that's what people should start focusing on. And if you see that coupled with margin deterioration, I mean, this stock is going to trade to the 200-day moving average. I think it's as simple as that.
Yeah, so we talked about this on Fast Money last night, and Christina Parson-Nevelis, who she is the fabulous semi reporter for CNBC, joined us on the desk for a few minutes. My point on the margins that I made, Guy, is that if on the Chinese sales, which is little more than 15% of NVIDIA, that they're hopefully getting back, or they hope they're getting back, they have the export license. I think they're starting to roll out a little bit. But if they have to pay 15% of their revenues to the government to have the export license on 16% of their sales, and they can't make that up in price increases, then you're not seeing margins go higher in the back half of the year, especially if you see somewhat of less demand. The Blackwell, this is the one that everyone's supposed to be upgrading from the Hopper. There have been some bugs in this thing. So there's two things to focus on. If they are not shipping as many Blackwell, right, as at these higher sort of price point, and Hopper's going to be discounted. We talked about this yesterday. So if you had the Hopper chip that a year and a half ago was the most, powerful, or whatever you want to call it, for training the models, and now you're buying Blackwell and you're transferring your Hoppers to inference, which takes less compute. I mean, there's a potential, Guy, with the Chinese stuff that you see margins dip below 70%. And, we saw them at 77% or something at their highs a couple years ago. So if they had guided to, a pickup in margins in the back half of the year, and we don't see it, to your point, you're going to see a stock going back towards that breakout level about $150. And by then, the 200-day moving average is going to be there. And so the last point I'll just make about that is, like, if you have that sort of move, you can do it from the highs. What was the high in this sort of thing, Guy?
173. You're talking about NVIDIA,
Yeah,
NVIDIA, right? I think it was
yeah.
180, 184. Hold on, let me
Yeah,
pull it up.
184.48. Okay, so that was obviously in the last week. And if you get down towards, people just forget, and you highlighted the fact on the show last night. I mean, this stock from its highs in January to its intraday lows was down 43%. And if you were to go, let's just say we're going to replicate that to some degree, you were going to go down 40% or something like that. I mean, you're talking about somewhere,
110, 115. That's again, yeah.
But people forget, let's make this a 5-year chart. In 2022 from the 21 highs.
You couldn't give NVIDIA away. There was about a year-long period of time where this stock went nowhere. And it went, actually, forget about it going nowhere. It was going lower. A lot of people threw in the collective towel. I mean, this is post-split prices, but I remember it sort of trading around $100, and there were a lot of people that were just not all that optimistic. So it's not like this is not ancient history. I mean, this is within the last 3 or 4 years. Now, I understand the company transformed itself. I get that. But with that said, this has been a pretty volatile stock along the way. And I get just the price to sales historically for a semiconductor stock, it probably is 2x what it should be. And that's just factually true. Now, you can say it's different this time. They have a huge moat, all those things. Well, yeah, they have a huge moat. There's competition is coming without question in this space, and it's coming in the form of a lot of different things, not least of which the Chinese. So just be aware here. NVIDIA is not as bulletproof as I think people think. Well, and by the way, I'm glad you mentioned the export stuff. I mean, I'm not getting into constitutional law here, but I did take the class. I mean, export taxes are prohibited by the Constitution. I think it's Article 1, Section 9, Clause 5. Congress, the Constitution prohibits Congress or anybody else from laying taxes and duties on articles exported from any state. So you figure that one out. I don't know how they're going to get around that.
Yeah. And the last thing I'll just say is that, I've highlighted this on numerous occasions. You just made the point about the sell-off that we had in April and how some of these, darlings, sold off far greater than that of the S&P or the NASDAQ, in 2022. Again, this stock, Meta, Netflix, and Tesla, they're all down 70%. Just think about that. Then they were on the cusp of the next secular bull market led by AI and that sort of thing. So, I just highlighted last one, and what we've been calling this, or at least I have, the dumbest
alligator.
No, the dumbest fucking stock in the market. We've been saying that for a few months. The stock's been rallying a whole heck of a lot. That would be the Palantir. We'll just say it again. I mean, you want a 50% drawdown, Guy, from those recent highs. It's down 25% right now. Where does that get you? It gets you right under $100 or so. I just drew that horizontal line because there was just a little gap there. You could say, well, Dan, you're out of your fucking mind. You know what I mean? Like, I'm just saying, but I
wouldn't say that.
There's no reason why this stock could not get cut in half. And if you want to do the math, people, you can say, well, Dan, off the lows, the stock was up 200%. Well, if you do the math on the downside, you can only go down 100%. So that's not going to happen, right, Guy? It's not going to go down 100%. I love it when you hear some of these market people say, well, it's down 125% or something like that. Well, math's math, Guy, right? And did you take math? I know you took constitutional law because you just
took math the same day. I got them both out of the way.
So. Yeah, we're down 25%.
Well, I mean, go back to the February high. The stock traded up to 125. By April, it was trading down to I think it traded $68 or $70. Percentage, I mean, this recent move since April sort of muddies the water. But go back and remember what that felt like when that stock was cascading lower, and now it's just doing it at a faster clip. And I want to emphasize, it's not an indictment of Palantir, the company. I think if you've watched Fast Money or listened to this show, this is one stock we've actually talked about glowingly. What we have gotten concerned about since the spring is this acceleration in valuation the market is willing to put on Palantir for whatever reason. I will tell you that now Dr. Karp has been telling the exact same story for the last decade-ish. Why do I know that? Because if you remember, Dan, which you do, I mean, Palantir was the P in my hope trade. So I understood what they were trying to do. If I'm being honest, in my wildest dreams, I never thought it would trade at the valuation and the price to sales that it's trading at, but I did think the stock was going to appreciate in a meaningful way. So it's not got anything to do with the company. It's just this madness around what the market is willing to pay for things.
Well, that's the most important point. You and I say that all the time. And when you talk about the company, its positioning or whatever, I mean, that speaks for itself, the growth and the margins. And unless a company is like overly promotional, you can make the argument that Palantir had never tamped down that kind of bullish sentiment towards the stock. We've been making the point that the stock has been divorced of the fundamentals of the company, as good as they may be, right? So that is what it is. I just wanted to highlight something that Doug sent, or Doug Cass wrote out something this morning, the man who bought the top tick. And I know that Doug was writing this up the other day, and I think we might have highlighted it. He'd been selling Palantir, and he had sold the top tick in the mid or high 180s. So good for Doug. Take a look on his streetpro.com. He documents everything, and so he will be the first one to send out the email telling you when he's covering that short, so dangerous name to be short. We've tried to play it with options over the last couple months and a few different instances. But Guy, when I read his note, the man who bought the top tick, I was thinking of the man who sold the world. Is that one that you have any Bowie on your playlist or no?
Man.
That's it.
Yeah.
I think that's
great. Rebel's a shitty song. It's just a really awful song.
Yeah.
It's just repetitive. It's brutal. I'm not a huge Bowie guy. People talk about the genius of David Bowie. I'm not discounting that. It just was never my jam. Like the whole Space Oddity thing, Ground Control to Major Tom.
I love that.
He's telling a story, but yeah.
I love that.
Starman, though, is a very good song.
Yeah. One thing I would say is that, and this ages us a little bit.
Changes is another one, I guess. Sorry, I have two Bowie songs.
Like I was in the mid 80s. I was like 12, 13. Okay.
Mhm.
And MTV was the thing. That was music discovery back then. Yeah, the radio was amazing, but the idea of having your boombox, you used to walk around with your boombox on your shoulder a little bit, Guy, in the mean streets of Croton on the Hudson. Maybe
no, because we didn't have those. We couldn't afford boomboxes. I mean, I'm sure in Syracuse you could afford a lot, and
I never had one of those. But in the in the 80s, like it was weird for me because MTV made Bowie a star among the MTV listener crowd. Let's say you were a teenager, like songs like Let's Dance, that sort of thing, which is horrible song. China Girl. Oh, you can't do that one anymore. I don't know how
it's a shitty song. I mean, it's just a bad
song. Those songs all of a sudden made pop stars out of some of these legendary rock stars of the 70s, which I think was interesting. Another example of that is Touch of Grey, Grateful Dead. I think that was the first video they ever did, and it was on MTV. And it's also kind of a horrible song, horrible video, kind of cringy if you love the Dead. I'm sure Doug Cass has something to say about that. My only point was, I remember thinking, who the hell are these old guys showing up on MTV? And a lot of them are still playing. Bob Weir just played a concert in Golden Gate Park, or played 3 concerts in a row, and he's 80 years old. That's crazy.
Think about that. So they were graybeards. They were graybeards 40-something years ago. And if you remember that shitty video, they all turned into skeletons on stage. So the skeletons is a Grateful Dead-y thing, so I understand. But they were at that point making fun of their advanced age 40-something years ago.
So couple things on that front, and maybe Jacob can find a picture. And very sadly, RIP, and I think it was a couple weeks ago, it was the 30-year anniversary of Jerry Garcia passing. I think it was the first week of August.
Enough time's gone by that we don't have to.
I love Jerry. Pull up a picture of Jerry Garcia from the summer of 1995 when he passed. Okay, when he passed, I think he was born in 42, the same year that my dad was born. You can do the math of how old he was when he passed, 42 to 95. Okay, you ready for this? I am his age. Okay, so if he was 51, is that the math there? Okay, look at that. I mean, we're the same. We're the same age. I mean,
Jerry was,
that's some hard living, man. But he did it every day, and he was much beloved, much beloved. Isn't that
yeah,
crazy?
I got not a lot of time.
Oh,
By
come
the
on.
way, this is from Michael Stivic. If you want to throw this up, I know it's not Michael Stivic. It's Matthew Stevick. We've made the joke before. Guy was more of an ABBA guy. Now he's saying that to be funny and derogatory. The truth is, I have more ABBA songs on my 900 song Spotify playlist than I have Grateful Dead songs. So through that lens, Matthew, you are correct. By the way, Tim Seymour of Fast Money fame can name each member of ABBA. We've done it before on the show. Back to you.
You said that last night, by the way. I don't know how ABBA came up in one of the
Well, no,
commercials.
because Adina Friedman, who is the CEO of the NASDAQ, came by mid-show with a bunch of guests, and those guests were from the sort of those Baltic states, Norway, Sweden, and Finland. And as we went up there, just as we got there, an ABBA song was playing during the commercial break, which I thought was sort of like Kismet.
Yeah.
That's Kismet, if you want to throw that up, Jacob.
So
the definition of.
I'm kind of looking for this right now. So Robert Plant, guy of Led Zeppelin fame.
Yeah, he's the front man, front person. Yes.
This is a band that you've known to like.
No. It's for me, it's Led Zeppelin and everybody else. So it's August. So soon, before you know it, we'll be getting those Spotify things. They call it Wrapped or something when they send you a little gift in the mail and you open it up and it tells you. For the last, I now think 3 consecutive years, I find myself in the top 0.5% of Led Zeppelin listeners in the Spotify universe. Back to you.
All right. So Robert Plant, who I saw once live in 2002, open for, I think it was 2002 or 3, open for The Who. And I think you went to that show at MSG also. We did not know each other back then. It was really sad because he was the opening act and really nobody was in there listening to him. You know, I went and got my cocktail. I went out there because I just felt like I had to be. I love Led Zeppelin. I don't love Led Zeppelin like you do, but I love Led Zeppelin. And it was bad. Like I felt really bad for him. You know, he had played MSG. Can you imagine what that was like in the 70s when Led Zeppelin played MSG? It must have been insane.
Mm-hmm.
So I thought it was really sad. He is playing at the Paramount in Brooklyn. I want to say in the next few months. I can't remember. I went and looked at tickets the other night. The tickets in the orchestra up front are face value $1,000. Now, I was just going to look for recent set lists, whether he just plays all, and he's been a prolific solo act. Even I think he's won Grammys in the last 10 years or something like that. I just wouldn't go to see him do his solo stuff. But again,
I will say this: there's some blasphemy here, but Led Zeppelin, as much as people love them as a live act, their studio stuff was much better than their live stuff. It was hit or miss in terms of live performances, and really had nothing to do with Jimmy Page, who's a genius, Bonham, there's nobody like Bonham ever, John Paul Jones, potentially the most underrated musician of our lifetime. I mean, Plant as a front person in a live setting, tough sometimes, tough to listen to. Yeah.
Wait, yeah. Well, it was
just
tough
not easy to, I mean, in the studio, I mean, they were able to get shit done, but just saying. So Plant out of it's amazing if we're getting into this, which we clearly are. Everybody, when they think of bands, you think of the Rolling Stones, the first person you think of is Mick Jagger. You think of The Who, you think of Roger Daltrey, right? I mean, that's just the way it works. Think of Zeppelin, you think of Robert Plant, because they're the front men in this capacity of the band. So the faces of the band. But the reality of the situation is, in the terms of Led Zeppelin specifically, Robert Plant is the 4th most important person in that band.
Maybe. I don't know. Jacob just said it's Robert Plant's birthday today, which is
well, happy birthday, Robert Plant.
I once got to shake Jimmy Page's hand.
You gave me a book.
That was the hand of God.
You went to a CNBC event. You left early, if memory serves. You went and saw that. You got one of those, those, what do they call those books where you put on your
coffee table book?
Coffee table books. And now I have it.
which doubled as a coffee table, by the way. And that's a deep cut. And anyone who can get that in the chat, the first one, we're going to send you some risk reversal swag. Okay.
I love
So
swag.
a coffee table book that turns into a coffee table. And actually, it's funny. I just saw the episode of the show that it's in. Yeah, CC, CC just said what it was in our chat, but he doesn't get the swag. You already have the swag. Yeah, it was really cool to meet Jimmy Page. And he did stamp the Zofo on that book. And now Guy Adami has it on his coffee table. Yeah. Bitch. Okay, let's get we got to go soon. I have an 11:45 call.
Well, let's go. I mean, let's move like the wind here.
All right, Guy. So 10-year yield. I want to bring this chart up. And you know, it's building the tension here. And
it is like a Tesla chart. Like, you know, we've talked about that pennant formation in Tesla, how the ranges have gotten smaller and smaller. And the exact same thing's happening here in terms of the 10-year yield. You have this uptrend that's been in place since September of last year, this downtrend that's been in place since the beginning of this year. You know, what's going to break? What's going to give here? And each day, I think it makes sense that we're seeing ranges that are smaller and smaller. I think I've been clear where I think yields are going, and I think they're going higher. And now it doesn't appear that way today. Other days it does. What I will say is this, and this is, I think, what the market is not paying enough attention to, and something that Tim Seymour's been talking about. Global yields have been going higher in a pretty meaningful way, and it's Spain, it's Italy, it's Germany, it's France, it's England. Obviously, we've talked about Japan, which is not in Europe, I know, but throw that in the mix, and it's a global debt problem that the United States is not the top of the list, but pretty high up on the list. And that's the continued reason why I think yields are going to go higher. And it's got nothing, I want to be crystal frickin' clear. It's got nothing to do with what the Fed may or may not do. It's got everything to do with everything else. Back to you.
Yeah, I agree. So it's a growth thing too. Let's just look at the U.S. dollar. Rosie of David Rosenberg Research. He had a note out yesterday about a secular bear market in the U.S. dollar. If you go look at a 10-year chart, I think this is pretty fascinating. The average price is 98.45. It's trading at 98.16. You can see where the midpoint of this 10-year chart has been. So to me, I think the jury's still out on this one. You can see the level. You see the volatility that we've seen over 10 years. You know what I mean? So I think it's a kind of a tough takeaway right now. But what you just said about differentials in interest rates and what you could say about differentials in growth, you know, there's and this administration's, you know, want to possibly continue to put pressure on the dollar, at least from verbally, and then some of the actions that they do. And then the independence of the central bank guy will certainly have an impact on that.
I'm sending a picture. I want to just show people, you know, you say sometimes you impact people's lives. So as you mentioned earlier, Bill Hochman is not here today. Timmy is manning the board, and great job, by the way. Bill Hochman got on a plane. Now, you know the way that I fly. Is that correct, Dan? You've seen me in an airplane.
Raw dog it. It's really disturbing.
Well, I raw dog it, but I also, you know, if I'm coming from work, I will have a suit and tie on, and I don't undo my tie. I'm one of those people. Bill Hochman sent me this picture. Jacob, I don't know. I just sent it to Jacob. Hopefully he can put it into this. But this is Bill Hochman last night getting onto a plane. So don't leave me hanging. But there you go.
They're good at that.
I just want to show people again, you know, the impact you can have on somebody's life.
That's true.
Back to you.
You impacted it. Last couple things we got. Let's go to gold.
I just sent it.
Bitcoin, gold, and then Bitcoin. Gold's kind of stuck here, which is fine on a relative basis.
Back to Bill.
Bitcoin acts pretty well. You see visually, you can see that uptrend there. You can see what looks to me like a consolidation. You also see 3,500 as resistance. Guy, do we kind of back and fill at least to the uptrend, but possibly to that 200-day moving average?
I don't think so. I can understand people would say we will. I don't know the scenario with which that will happen. I would imagine it could happen on some sort of global peace accord or a more hawkish Fed type of thing where, you know, maybe the dollar catches a bit of a bid. I don't know if any of those things are going to happen. I think the gold trade continues to be alive and well. And as I mentioned over the last couple of weeks, the gold miners are starting to pick up on this as well, because historically the market is sort of shied away from gold mining stocks, understanding that the commodity is going to disappoint them. I think now they finally figured out that this gold move is real. Now I think we have the picture. Sorry, this is Bill Hochman, Jacob.
Yeah, there you go.
It's just killing me. Oh, here it comes. Look at this. This is Bill Hochman last night getting ready to get on a plane. Isn't that great?
It's very odd that Bill, I haven't seen him wear a collared shirt in 2 years that he's been in here with us, that he's wearing a collared shirt and he's all knotted up. I wonder if he just did that for you, Guy.
No, I don't think so.
That was for an audience of one.
A lot of effort.
So, all right. So let's just do really quickly the Bitcoin. We highlighted it yesterday. I mean, maybe it matters, maybe it doesn't. I can't imagine, like, people have said Bitcoin's plunging or this and that for Bitcoin. This is like the most, for something that's correlated to the NASDAQ, and you look at some of the winners, the way that they're trading, like a Palantir, NVIDIA, a whole host of others. Bitcoin seems okay right here, Guy.
That's the point I made last night. I made it on our show yesterday. And
by the way, you did not like that question. You did not like that question.
Oh, about Bitcoin last night?
Host looks at you and she's like, Guy, explain to me, blah, 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 blah. And you just start laughing.
Well, I laughed because what I said to her was like, you might as well ask me what the winning lottery number is going to be tonight, because I have no friggin' idea. And I don't pretend. I mean, one thing about me, if I don't know, I'm not going to try to make shit up. But what I said to her is, look, what's amazing is, if you think, we're talking about a plunge here. It's not a huge move. If this was an equity, we probably wouldn't be talking about it. But what I've come to the realization is, in the NASDAQ and Bitcoin, for whatever reason, seem attached at the hip. And if you start seeing some risk off in the NASDAQ, Bitcoin's not going to be spared. So, yeah, that's one of my takeaways. And I am looking at Bitcoin as somewhat of a leading indicator here. And it's not obviously traded particularly well over the last couple of days. That not with all that said, it's not like we're cascading lower. But I do think there's a real chance that it happens. And before we get out of here, because I know you get, throw up a MicroStrategy chart, because, MicroStrategy has not been trading well since November, with Bitcoin up as much as it's been. I think Bitcoin is up like 40-something% since November-ish. Yeah. MicroStrategies is actually lower since like election December. And there's something brewing there, people. So you see what I'm looking at as well, obviously. So just stay tuned for that one. Because that's coming to a theater near you.
Yeah, I guess the big issue here, and we saw this with that GBTC, I want to say 5 or 6 years ago, for some reason, this was I think the first ETF that held Bitcoin. And it traded a huge premium for a long time to its NAV. And then some of the other stuff started, futures from CME came on. There was a whole host of other ways to kind of get access to Bitcoin. And then it traded at a discount. You know what I mean? Like, why would you pay any fees on that when you could just buy the underlying or whatever, or when there was lower cost? So this is, if that premium comes out, it might not say much about Bitcoin, Guy, but it'll be a real problem for this stock, because it's layered with all different types of debt. And, so the leverage here is insane. So I'm with you on that one. All right, peeps. So, Guy, Risk Reversal Podcast, you and I, drops tomorrow morning. We're gonna have a vibe.
It's gonna be fire emoji.
We have a vibe session, and then on Friday we have a drop. On Friday we have a drop. We sit down with Stuart.
I'm gonna have a drop before that, hopefully.
Okay. On that note, we'll see everybody. Thanks for being here.
Before we go, hold on. I know you got to go. This is just an interesting line from a Grateful Dead song that Doug just shared. Now, this is the problem with the Grateful Dead, because I know how people treat their pets. I know the rent is in arrears, meaning that you haven't paid it in a while. I know people. The dog has not been fed in years. This is what I'll say, knowing the U.S. Public at large. People could be not paying their rent and shit. I guarantee they're feeding their dogs, because that's just the way we roll. Back to you.
Yeah, no doubt about it. All right, everyone. And that was Touch of Gray, Touch of Guy. We really appreciate it. We'll see you later. Thanks, Doug, for all your contributions, as always. Thanks a lot. Bye.